Gold has been consolidating in a tight range, building pressure for a major move. The next breakout could send gold surging toward 4,400 or trigger a sharp correction almost no one is ready for. But here's the truth. Most traders miss gold's biggest moves because they don't truly understand the forces driving this market right now. In this breakdown, I'll reveal how institutions are quietly positioning, uncover the 3 macro forces shaping gold's next move, and share my exact trading roadmap for the week. If you're serious about trading gold, stay with me till the end. I'll show you exactly what's driving this market and how to trade it. Macro outlook: 3 key forces driving gold. Force number 1, geopolitical and fiscal risks. The US faces a possible government shutdown. Pressure is mounting on the dollar while gold quietly strengthens as a safe haven. The US has deployed F-35 fighter jets and various military assets near Venezuela. Caracas responded immediately, activating its S-300 air defense systems, reportedly ready to engage any US aircraft. It's not just politics, it's a clear sign of rising global tension, and gold always reacts to that. Russia-Ukraine peace talks show some progress, but no deal yet. Until a concrete agreement is reached, uncertainty will keep gold supported as a safe haven. That's just the first force, but the second one is even bigger: the US dollar. Geopolitics steal the spotlight, but the real fight is happening in the dollar. Force number 2, the US dollar dynamics. The dollar remains the most important counterforce to gold. Let's break it down step by step. DXY technical analysis. Starting with the weekly chart. After last week's strong bullish candle, this week formed a bearish pin bar as DXY retested the major resistance at 100 and pulled back, exactly as we warned in our previous weekly outlook. This pin bar represents a failed breakout above 99.8 followed by a drop. With this reaction, DXY may need more time to consolidate before any successful breakout above 100. If it fails to break above 100, the index could correct deeper toward 97.98 to build new bullish momentum. However, if DXY closes above 100, the next targets would be 101.5, and if that level is cleared, we could see an extended recovery toward 104 and beyond. On the daily chart, DXY retested the previous top at 99.8 but closed below resistance, forming a doji candle at 100 followed by 2 bearish candles, a possible evening star reversal pattern. This setup may also develop into a double top formation. However, the index is still within a short-term uptrend, trading above the 20-day MA, so a brief consolidation could occur before the next correction. Zoom into the H4 chart. Price remains within a short-term ascending channel with higher lows. It's currently testing support near 99, showing mild buying pressure, suggesting a minor rebound before potentially forming a double top and then pulling back toward 97.98. If an H4 candle closes above 100, the next upside targets would be 101.5 and higher. Here's the catch: DXY's next move won't just impact gold, it could rewrite the short-term trading landscape entirely. Now, let's look behind the charts at the institutional flows shaping gold's next move. Finally, institutional activity. While retail traders are still debating whether gold has already peaked, institutional players tell a different story. After selling 22 tons of gold earlier to reduce risk during the recent correction, Gold Trust has resumed accumulation since October 30th. Over just the past 2 sessions, they added another 4 tons. When institutions add even a few tons, it's not speculation, it's conviction. These flows often precede major multi-week rallies. They continue to hold a substantial amount of gold accumulated in previous weeks and have not fully unwound those positions. This behavior suggests that institutions are waiting for a more favorable moment next week to accumulate further, potentially to drive gold prices higher once again. When capital of this magnitude shifts, it's not noise, it's a message. Retail traders often get trapped chasing moves too late, and that's when the real game in gold begins. These actions suggest the fund may still be aiming to drive gold toward 4,200 to 4,400 and eventually 4,700 to 5,000 before taking profits, positioning itself to hedge against a possible Ukraine peace deal and a potential US dollar rebound. Now that we understand how capital is moving, it's time to turn to the charts. Let's zoom in and see what gold is really telling us. Gold technical analysis. First, congratulations to those who followed my October 29, 2025 analysis and bought around 3,900 when the price retested the 3,900 support. You're now sitting on a gain of more than 1,000 pips. We called this move from 3,900 before it even started, and that's the power of understanding market structure. We shared this setup earlier in our Telegram group. That's why it's crucial to subscribe to the channel or join our Telegram to get real-time updates so you don't miss the next major wave in gold. Now, let's break it down, step by step. Weekly, daily, H4, step by step, here's what the market is really showing. Starting with the weekly frame. Since bottoming at 1,600, gold has surged to 4,400, a move of nearly 28,000 pips. This rally was fueled by four converging forces. The dollar's drop from 114.6 to 96, geopolitical risks in Ukraine and the Middle East, trade tensions under the Trump administration, fiscal risks, government shutdown in Washington. Ask yourself, how often do we see such perfect alignment? It could take more decades or never happen again. At this stage, peace in Ukraine remains elusive, fiscal risks are still present, and global markets have yet to find solid footing, all of which continue to support gold's upside momentum in the coming weeks. However, a strong rebound in the US dollar DXY could easily trigger a sharp correction in gold from current levels. On the other hand, if the DXY continues to consolidate or weaken, gold is likely to rebound to 4,100, 4,200 if break decisively above 4,200, paving the way for a potential rally toward 4,300, 4,400 and beyond. On the weekly chart, after last week's bullish pin bar rebound from the false break below 3,900, driven by the US-China trade agreement and a temporary DXY recovery, this week's candle shows a bullish pin bar closing above 4,000 with no new lower low, signaling renewed strength as the US dollar begins to weaken again. Next week, gold is likely to push higher, retesting key resistances at 4,200, 4,300, and 4,400. Shifting down to the daily. Now let's look at the daily chart. This is where the broader story unfolds. Gold began the week with a morning star bullish reversal pattern exactly as highlighted in my October 29th analysis. The market has since consolidated tightly between 3,900 and 4,000 for 9 consecutive sessions, building energy for a strong breakout move. The overall trend remains bullish, supported by geopolitical risks, fiscal concerns, and ongoing central bank accumulation. Importantly, DXY's renewed weakness further supports gold's upward momentum. As long as price stays above 3,900, the next upside targets are 4,100, 4,200, and beyond. A daily close below 3,900 could lead to a retest of 3,800, but that scenario currently looks less probable. So let's zoom into the H4 chart, where things get even more interesting. On the H4 chart, gold is consolidating within an ascending triangle with higher lows and price holding above the 20-period MA. RSI trend remains bullish, staying above 50, confirming growing buying strength. When price tested the 40-30 resistance zone, sellers could not push it lower. Instead, buyers continued to build pressure, maintaining higher lows. If an H4 candle closes above 40-30, gold could break out of the range and rally strongly toward 4,100, 4,200. A break above 4,200 would open the way for further gains toward 4,300 and 4,400. Keep in mind, gold has already corrected nearly 5,000 pips from 4,400 to 3,900, so a technical rebound of at least 50% of that move toward 4,150 to 4,200 is a reasonable expectation. This structure gives traders a clear multi-time frame view. Overall structure remains bullish, with the current pullback seen as a healthy correction within the uptrend. All of this leads us to the key question: why consider both buying and selling gold at this stage? Gold stays in a strong bullish cycle, supported by institutional demand and solid technical setups. However, the DXY rebound remains a key headwind to watch. Let's turn that analysis into a practical trading plan, the exact playbook I'll be following for the week ahead.
Trading Plan, November 10 to 14, 2025. First buy zone, 3880 to 3935. Institutional support, round number, fail break, probability approximately 95%. Stop loss, 3877. Targets, 3949 to 3997 short, 4027 to 4097 mid, 4147 to 4377 long. Second buy zone, 3950 to 3973. H4 support, round number plus rising trend line, approximately 90%. Stop loss, 3947. Targets, 3997 to 4017 short, 4027 to 4097 mid, 4147 to 4377 long. Third buy zone, 3980 to 3993. Nearest support, H4 MA20 support, probability approximately 80%. Stop loss, 3945. Targets, 4017 to 4027 short, 4046 to 4097 mid, 4147 to 4197 long. Breakout buy. Wait for H4 close above 4030, then buy. Breakout, probability approximately 80%. Stop loss, 4018. Targets, 4046 to 4067 short, 4077 to 4097 mid, 4147 to 4197 long. If you're still watching, you're already ahead 90% of traders. First sell zone, 4145 to 4162. H4 strong resistance, probability approximately 85%. Stop loss, 4163. Targets, 4131 to 4103 short, 4073 to 4053 mid, 4033 to 4003 long. Second sell zone, 4185 to 4200. Neckline resistance of the double top pattern, probability approximately 90%. Stop loss, 4201. Targets, 4151 to 4123 short, 4073 to 4053 mid, 4033 to 4003 long. Third sell zone, 4287 to 4299, round number, probability approximately 90%. Stop loss, 4301. Targets, 4253 to 4203 short, 4153 to 4103 mid, 4053 to 4003 long. Fourth sell zone, 4377 to 4400, all-time high, probability approximately 99%. Stop loss, 4401. Targets, 4353 to 4303 short, 4253 to 4203 mid, 4053 to 4003 long. Pro tip: false breakout, wait for the retest, re-enter for clean profits. Remember, probabilities don't guarantee outcomes, but they keep us disciplined. Gold doesn't move randomly, it reacts to real global shifts. This move hasn't even started yet, and this is your chance to position yourself ahead of the market. Don't follow the crowd, trade with clarity, not emotion. Subscribe now and join Our to receive real-time alerts and exclusive insights. Never miss the next big move before it begins. Master gold, master the market. This is not financial advice.